The Iran conflict is reaching Rachel and Ross levels of will they, won't they, which is causing the market to pause. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, April 24th. We know that buying or selling a home can be very stressful and confusing, and that's why we do these weekly videos so you can know how the market is impacting your options as a home seller or buyer. Starting off, we like to look at how the market performed this week. There are 77 homes on the market now, 11 more than we had last week, with the average asking price roughly the same, just over 1.9 million. 6 homes sold, 4 fewer than last week at 10, but the average closing this is the pending numbers, but 6 fewer pending, not sold. But the average asking price on those pending sales is roughly the same. Well, actually, it's about 100,000 less, 90,000 less than last week. And now for the actual sold numbers, we had 12 closed this week, 1 more than last week, with the average closing price almost spot on, $19,000 difference, which is less than 1% of a difference in the $2 million price range. So now that we know how the market performed this past week, we can look ahead at the broader indicators that help us know where the market is probably heading. But before we do that, if you do find this information helpful, you can subscribe so you don't miss out on future updates. And while you're down there hitting that subscribe button, why don't you share it with a friend also? I think everyone deserves to be in the know about their local market. Okay, talking about the trends and indicators. Let's start with the inventory like we always do. And that inventory, like I already said, climbed significantly this week. Last week, it was reasonable to assume that the sudden jump in inventory was due to homeowners waiting till after spring break to come onto the market. But now we have 2 weeks of dramatic increase. And this week, I would have expected the rate to, in the inventory increase, to slow down a little bit. Instead, inventory increased by a more significant rate compared to last week by 1 home, or maybe 2. Now, with that, the past 2 weeks of increased inventory and the lower number of pending sales, like I talked about earlier when I called them sold, 6 compared to 11, our turnover rate dropped significantly, and we are now down below that 50% line to a little more than a quarter of the normal turnover rate at 35%, which is significantly less than last week. Now, the over-under number is still sitting in the over range at the moment, which is nice to see, but you can see from the last couple of weeks that it is trending back to the under range, and I won't be surprised if it dips into that under range in the coming weeks. The negative turn that the 2 previous indicators demonstrates that there has been less buyer activity recently, which should in turn lead to homes not getting multiple offers on average, which is what is the biggest driving factor for that over-under number. While the first 3 market indicators this week are showing signs of weakness, the average sales price is still holding strong. In fact, it continued to improve this week. You can see it's been on a pretty steady improvement trend line since February here. The average price is sitting right in between that $1.9 to $2 million range. Not quite the numbers right there, but you get the idea, which is where I've been saying I think the average price will float around for most of the year, in between that 1.9 to 2 million range. So it's right in line with what I expect. While there has been a lot of uncertainty lately with the economy due to the oil prices, the QQQ fund had another great week this week, trending up since it had a drop-off in March. The fund closed with another 3% growth this week. So it shows that at least the market and investors are hopeful and expectant that the conflict in the Middle East is coming to an end and that the ceasefire will hold. And in more positive financial news, the interest rates continued to drop. They're down another 7 basis points this week, down to 6.23%. While the rates are coming down quicker than I assumed they would have when they jumped back up with the initial news of the conflict in Iran, they are still coming down at a slower rate than the recent increase. So it spiked. This upward trajectory on this line is a higher, sharper line than this decrease, but it is still coming down quicker than I thought. And like I said, the fact that they are continuing to improve is a great sign. There's been a fair amount of on-again, off-again news surrounding the conflict in Iran. That continues to put a damper on the economy and is causing a lot of shoppers to hold off on big purchases. And there is no purchase bigger than a home. But even with the uncertainty around the conflict and the ensuing fluctuations in oil prices, our housing market has basically been holding steady. This feels like it will continue throughout the rest of the spring as everyone tries to figure out if the economy will hold or if inflation is going to kick in again. It is more important than it has been in a long time to make sure you are working with someone who you can trust that will give you thoughtful, accurate information as buyers or sellers as you're going to and as you are starting to look for opportunities to save on the margins in this transaction that is selling or buying a house. Thank you for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the bell so you can stay informed on how the market shapes up as we continue into spring. And if you have any questions on how you can navigate this stressful, often confusing process of selling or buying, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. I hope you had a safe weekend, and I'll see you next week with a new update.